Well, hello, Solis Wealth Management family. Luis Carrera here, one of your wealth advisors here at Solis Wealth. Thanks so much for tuning in today. Well, firstly, hope your summer is going great. Now, if you live in a warm part of the country, as we do, you probably try to escape the heat every opportunity you have. And for us here in the office, the weekends are perfect to escape up to the nearby mountain towns or the beach cities to cool off for a few days and recharge those batteries. But wherever you are this summer, we're hoping you're having a great time. Now, there are a few things we're keeping an eye on too. The latest print by the Bureau of Labor Statistics on inflation, the CPI number, was the lowest we've seen since June of 2023, when we had a 3% reading also. Now, if you go back an additional 12 months, the print then was the peak of inflation at 9.1%. So clearly, the Fed's policy, restrictive interest rate policy implemented, has brought the inflationary pressures down, but it's now spilling into other parts of the market. We're starting to see some jobless claims numbers deteriorate. We're also seeing signs of consumer spending slowing down as well. We know the Fed is keeping a close eye on this, and during their meeting here later in the next few days at the end of July, they're going to be addressing these concerns, and the market expects the Fed to signal a cut in September, of course, provided the current economic conditions persistent. Now, since we seem to be in a transition from higher interest rates and a holding pattern to a lowering interest rate environment, I thought today we'd talk about interest rates, and in particular, lower interest rates that tend to benefit stocks. Now, when the Fed starts implementing this easing strategy, we may see a broadening in participation in the stock market, shifting away from the Magnificent Seven stocks that have dominated the uptrend to other types of companies that may benefit from lower interest rates. They may see their bottom lines improve as their debt servicing costs will drop. We also know that in the beginning stages of an easing cycle in interest rates, small and mid-sized companies tend to benefit more than larger companies, simply because these are the types of companies that struggle getting financing and they end up paying a higher interest rates. Perhaps in anticipation to this is why in the last month, small caps have outperformed the overall stock market. Now, nevertheless, we do expect the current volatility to persist, not only affected by the domestic and international economic data points, but also the, of course, upcoming US election and any other geopolitical events that may arise. But regardless of the circumstances, please know also that your Solis Wealth Management team is always here for you. We're monitoring the situation closely. Our investment committee continues to meet on an ongoing basis. And if you have any questions or comments, please give us a call or send us an email. We'd love to hear from you. With that, so long, everyone.